The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day is Myer, seeing quite a bit of pressure in retail sales companies today. Sales for Myer in the 22 weeks to December down 0.8% to $1.59 billion. Group online sales rose 2.8% in the period, representing 22% of total sales. Operating gross profit fell $15 million to $560 million. And Myer says total sales were affected by the temporary closure of one of its stores and a tough macroeconomic environment. It did go on to say Black Friday was a strong event, but consumers remain cautious. And the stock has, of course, come under pressure, down by almost 18% at lunchtime and dragging down some of the other retailers with it. David, I barely said hello to you, so we'll start with you. Your thoughts here, and particularly in the back of, UBS downgraded Lovisa last week. We had the retail trade figures as well.
Yes, fairly poor result from Myer today, indicating that their sales were lower. Obviously, as you mentioned, that there was that impact of the Werribee store. I guess positive in that their online sales were up, but generally I think it was a bit of a negative announcement, and we've obviously seen that impact fairly significantly in the market today, with the shares falling 18.5% or nearly 18.5%. Probably flies in the face of what we've seen for a lot of the retailers, that retail spending had been relatively stable and probably a bit more resilient than many of the analysts have been expecting across 2024. So, they've obviously sold off the stock today. And the other stock that's been impacted by that is Premier Investments, because there's currently a deal on the table between Myer and Premier, where Premier is selling their apparel brands to Myer and will end up being the major shareholder of Myer. So the vote for that is the 23rd of January. So obviously investors will be looking at both stocks. My preference would be towards Premier rather than Myer, because you get the potential to get Myer shares, a large fully franked dividend, and you've got the jewel in the crown with the Peter Alexander and Smiggle. So I'd probably be steering clear of Myer, and if you want exposure to that sector, probably through Premier.
All right, Mark.
Yeah, look, this doesn't surprise me. We've been sort of thinking that consumer discretion was pretty overvalued. I think this is the start of a broader pattern, probably leading into earnings. I think that a lot of the premium Aussie consumer discretionary stocks are really overpriced. We've got JB Hi-Fi later on in the show, but there is zero. I mean, the size of the move today, it just really shows these things are priced to perfection, and any sort of wobble or even not beating basically means that there is a lot of downside room. I totally agree with David's comment about if you were going to own either one, Premier would be by far the preference, but it's down about 11% today as well. But I honestly, I wouldn't own either at this point in time. I think we haven't really been in consumer discretionary for the better part of a year. We had some Lovisa on, which we sold higher overall, but with the announcement of that ex-employee or ex-C-suite starting their own competitor, but we're very much wait and see with these, because whilst we love quite a few of these companies, the Wesfarmers and the JB Hi-Fis of the world, they're at super premium prices, and I really can't see them maintaining that. We've had rates are. There is no way we're getting a rate cut in February. As much as the analysts and the economists and the bankers want to wish for it, wishes don't necessarily translate into reality. So I would say this would be I'm not saying it's a buy here at all. I think it's basically just pull back to where it was in early December.
If you had it, would you hold, or you just get out altogether?
I wouldn't be in it. So I suppose it's a sell for me. If you really, but further to David's point, if you want to have an interest in it, and I would own it via Premier Investments if they're going to have if they're going to be the major shareholder in it, because you get some diversification that way. But overall, it's certainly not. It doesn't surprise me at all, and I think that these things can continue to drop even further.
All right, well, that's a sell from both our guests on our stock of the day. David saying here does have a preference if you do want to be in the space for Premier Investments, given their tie-up. He says he got the fully franked Myer dividend and the jewel in the crown with Peter Alexander. And Mark has not been in consumer discretionary for a while, would not be looking at this, and thinks that there could be a broader downward trend for some of these players, and there's not going to be a rate cut anytime soon, despite what economists and market analysts say. So that is our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.